Good afternoon and welcome to the TheoTRADE afternoon video. I'm Blake Young. Today is September 19th, 2024. And today we're going to be talking about the Middle East and how it's going to impact both defense sector stocks as well as oil stocks. And you might have looked at this, thought you maybe we're going to continue to talk about the FOMC and the federal rate cut. Just as a quick highlight, even Forex Factory and looking at the data, you can see federal funds rate. They even know that that 50 basis point cut was negative. It's seen as a negative sign for the economy. Cutting rates is not seen as a positive thing here, and it's putting the pressure onto the downside. And we expect to see some further downside after the market reacts to the fact that we will have more inflation. But we're not going to cover about inflation. We'll talk about inflation, stagflation, and other things tomorrow morning with Brandon and I at the live. But we're going to talk specifically about other news-driven items, and that is the Middle East. And so we could go and we could talk even about Russia and Ukraine and the explosions, the escalation that's going on there. But with this pager walkie-talkie explosions and Hezbollah and Israel and the fact that we're moving the elite forces further north and we're pushing, well, really escalating this war into a more severe and more significant situation. We've got a lot of news going on and a lot of things that are going to put pressure on the markets and primarily towards higher oil prices, higher defense sector like aerospace defense. So let's take a look at those a little closer. And the easiest one, I think, to track is the fact that we're looking at crude going higher on the more uncertainty that's going on in the Middle East. You can see that crude bounced off of these lows, pushed higher, and we have a history of going between 66.76, 66.76, you could say 65.75, and then going from 76 to 86 as we kind of go in these sideways moves as it prices it out. Well, this is a sizable bounce. We bounced off of 65 or all the way up to 71, and I do think we're going to go up to 75 in the short term. You can see it's a lovely little pullback and a bounce. And that move is pushing to the weekly monkey bar highs. And I do think crude, again, is going to go up and test 75, 76 before the end of next week, possibly even by tomorrow or Monday. And if we're seeing pressure pushing higher in crude prices, then those that are producing it domestically and those that are producing it not involved in the Middle East are going to have higher margins. Even the ones involved in the Middle East will have higher margins. And so I would definitely be looking at the exploration stocks like Exo, as their margins will increase. And the move today is a gap up, close down. So I think you should be able to get an opportunity to buy in maybe near 132 and back up to 141, maybe up to 150. And looking for that pullback, that could be another 8 to 10% just to get back up to these previous highs. You could just take the highest level and just include Olive Energy. Olive Energy is a nice little gap up, close down as well. So let it pull back maybe near 87.80. And we should be able to get up to the previous highs around 91.50. So kind of low-hanging fruit. I do like the idea of going long energy. I've been talking about that in the main room. And as long as we still have inflation and stagflation, we should be looking at energy stocks. And you certainly see that we have my gold versus bonds indicators showing that we have a lot of inflation. We're not pulling back on inflation. We have not reached our goal and our target. And I think this rate cut is only going to make it worse. But if we have more political uncertainty, this is where I'm going to look at the defense contractors. Now, I'm going to look at General Dynamics, Northrop, and a couple of others. But the way you can look at this, the easiest way, I think, is to go to the Market Watch tab, go to the S&P 500, and you're going to go down here into industrials. Hold your shift key down, it'll zoom into that, or you can go on here on the left-hand side and do that. And then you're going to be focusing on aerospace and defense. Now, you could also look at some other things, but this is where I'm going to focus, is right here. And if we're looking at aerospace defense, you can see GE's listed in there, Lockheed Martin. We're going to look at Northrop. We're going to look at General Dynamic. We're going to look at RTX. And probably TGG, maybe HWM. These are the ones that we're going to look at for an opportunity as soon as we get a technical confirmation. If we see a heightened escalated war, then we should expect to see these move higher. The easier one, maybe just to go to DFEN. DFEN is a directional triple leverage aerospace, but it is leveraged. I don't like holding long-term positions in leverage, and you need to be careful with those because of the way they're compounded. So to deal with those individually, let's start with General Dynamic. General Dynamic didn't really gain today. It's kind of traded flat. But I do think there's going to be some more upside. And I'm just trying to find stocks and positions that are outside of the discussion of inflation. And so we're not worried about whether inflation is there or not. This is one that there will be contracts one way or the other, regardless of inflation, deflation, stagflation. It just doesn't matter. And General Dynamic is one. We broke out of this area through here, whether we want to call it a cup and handle or a rising triangle or a rising wedge. no matter what you're looking at, this is looking for about a $25 move higher from the breakout, which means from yesterday's bounce. I'm looking at 325 to 330 on General Dynamic in the short term. Today's flat candle doesn't give me the confirmation I want to step into it, but it does set up the chart. NOC, or Northrop Group, is similar. We can see that we had this lovely uptrend, a very accelerated uptrend, and then we've gone sideways. It's not quite enough breakout for me to assume that we're going to go higher that same distance, but I still like this idea of stepping into Northrop Group. They do have about a 1.5% dividend on Northrop as well. Let's go to TDG, Transdim Group. Transdigm, not sure how to pronounce that, but this is the one that I kind of like the best so far. And we have a price pattern, ascending triangle, or a cup and handle, and either way, it appears that we broke free, gapped up, closed down, traded above the previous close, gapped up, closed down again, gapped up, closed down again. So we're struggling to move higher, but I like the fact that we've broke out in every one of these retests. Even every gap up, closed down is just retesting the breakout. And short target on this, 1300 to 1376, we're looking at a 76-point move. Big target, now we're talking about 1192 all the way up to 1369, 1370. We're almost talking 200 points. Now, this seems very expensive. It's an expensive stock. It certainly is, but it doesn't mean that they can't trade options on it. Dropping down to the implied volatility, you can see the implied volatility is at 46%. It might even be worth selling puts on this, or put verticals, or simply buying an in-out spread on TDG. Going back, we'll take a look at HWM. HWM, similar breakout. This is one that is holding above the close prices, but did not clear the upper shadows. I think we can wait until this one breaks through the upper shadows, at which point we'd be looking for a move of about $8 to $9, another 10% move higher in HWM. And I wasn't going to do Joby and Curtis, but let's go do these really quickly as something to take into consideration. Curtis is also up there, not quite clearing yesterday's high, but it's a solid gap up and a close higher. It's the highest close that CW or Curtis has had this year. And Joby, Joby, super discounted. And if you look at the options, it is a current implied volatility of 30%, which means it's inexpensive if you want to buy a call. It's a very inexpensive stock. So for the discount, and if we see more contracts move into Joby, if we see higher returns and higher earnings, then Joby could be a very cheap way to step into the defense sector. And again, we can go back to defend if you want to take the triple leverage, but it is triple leverage. Be careful with this one. One of the ones that we can try to overlay it and cross over, it would be something like Halliburton. Halliburton is highly discounted down through here. It is one that's kind of a defense contractor in some cases and an oil company on the other. The reason why I call it a defense contractor is because it has a tendency, even though it's energy, this is who gets sent in oftentimes after there's conflict. We see rebuilding of pipelines and things like that Halliburton ends up getting contracts on. So it's something to pay attention to if we see this conflict escalate in the Middle East. Halliburton might be able to get some more contracts in the future. And one more for good measure. Let's take a look at RTX. RTX is also a defense contractor, and it's been pulling back. It could turn into a really funny looking head and shoulders, and we could be reversing back this 123 down to about 117, about a $5 move. But I think you could also look at this as a breakout if we clear this high, clear about 120. Not only would I expect a 123, I would expect us to repeat some of these moves that we've had, keeping in mind that we do have earnings coming up in October that could have an influence, possibly to the upside, especially if we see additional contracts happen there. I did forget to say one other thing is not only do we have the conflict that is going on in the Middle East, and we also have the fact that Kamala Harris will be meeting with Ukraine President Zelensky, and certainly an indication that we could continue to see these defense contractors supporting Ukraine in the future. And that's going to do it for me today. Again, we'll watch this tomorrow. We'll talk about a little bit more about stagflation. We'll talk a little bit more about defense contractors and the Middle East conflict and oil, a little bit more heavily into oil. But I wanted to make sure we take some time to talk about aerospace defense contractors today. Have a great day. We'll see you in the morning.